Welcome back. For today's Business Matters, we have Don Ma here with us. Don, how's it going?
Doing well. How are you guys doing? Fiona, Chris?
Pretty good. What do you have for us today?
Yeah, so a lot of news to cover today, so let me get right on ahead with that over here on the wall. Nippon Steel says senior management and a majority of the board members at U.S. Steel will be American citizens, and that's if Japan's biggest steelmaker can close the deal. Now, Democratic presidential candidate Kamala Harris this week said that U.S. Steel should remain American-owned and American-operated. Former President Trump has pledged to block the deal if he is elected. Now, to gain support from politicians and labor unions, Nippon Steel hired former Secretary of State Mike Pompeo as an advisor. The Japanese company also unveiled a plan last week to invest an additional $1.3 billion in U.S. Steel's mills. Nippon Steel also saying that its vice chairman plans to visit the U.S. this month for meetings related to the deal. Both companies aim to complete the acquisition by the end of the year, depending on regulatory approvals. Now on to Volvo. It has pulled the e-brake on its EV target. The Swedish car maker has scrapped its 2030 target for a fully electric lineup. Its new goal now is to have at least 90% of cars sold then to be fully electric or plug-in hybrid. It added that plug-in hybrids would be critical for its future growth. Volvo and many major automakers have been bracing for the effects of European tariffs on Chinese-made EVs, as well as the slowing demand for EVs. Drivers have been reluctant to switch to electric due to a lack of affordable models and charging infrastructure. Now in Germany, Volkswagen leaders warning that it is under pressure to revamp its brand image. The company's finance chief said today that Volkswagen has 1, maybe 2 years to turn the car brand around. Volkswagen recently revealed that it may start cutting costs and closing factories. At a meeting this morning, workers voiced their frustration. They accused management of betraying their trust, and the company is grappling with a significant dip in demand for its cars. It now aims to transition to producing mostly electric vehicles. Workers also criticized the CEO for prioritizing a software deal with the U.S. firm over preserving German jobs. Now, more shoppers looks like are trying to stretch their dollars. Dollar Tree has revealed that weak demand has spread from its core lower-income customers to its middle and higher-income customers as well. So according to the Wall Street Journal, Dollar Tree revealed that customers with an annual income of over $125,000 are shifting from shopping for want to shopping for need. Dollar Tree has cut its full-year outlook. In response, its stock plunged. At last check, it's in the red about 23%. Meanwhile, the world's third most valuable company, which is Nvidia, lost a massive $279 billion in market value on Tuesday. Joining me now is Vijay Marolia. He's the founder and CIO of RP Capital Solutions. Now, Vijay, it's unclear why Nvidia stock fell yesterday. What are some possibilities?
I think it's part of an overall correction, not just in the stock market in general, but specifically semiconductor stocks. So we've talked about this before. Trees don't grow to the sky, and markets must correct. And I think it's very important to keep in mind what time it is, not today, but throughout the year. And there are seasonal factors. And so, as they say in the summer, you should expect more volatility. Selling may go away. And so historically, September and October are going to be the most volatile months. There's not as many bids. And you're already seeing a fragile market. You got an election coming up. We don't know which way the world is going. And so I think that the uncertainty adds to the volatility, but I don't think that it's a big shock.
So do you see this as a buying opportunity?
Absolutely. I think if you're a long-term investor, and I think that it's a rare thing now because a lot of people are basically day trading in the markets. I think it's not a coincidence that you're seeing you're seeing increased option usage, but you're seeing it with 0 days to maturity. So that's a lottery ticket. That's not investing. When you invest in the stock market, you're investing in a pie that gets bigger for everybody, so everybody can get a piece. When you're investing in derivatives or options, for you to win, somebody else has to lose. And so I'm not saying that I'm anti-derivative. We make a lot of money in derivatives. But what I'm saying is you really need to know what you're doing, and you really need to be sure that you did your homework, because for you to win, somebody else must not done it or lose.
Do you believe the market has overvalued AI-related stocks, NVIDIA, for example?
I wish I had that crystal ball, Don, but it's a great question. It's the question that everybody is asking. But I think that if you look in the grand scheme of things, we're still early. I think we're maybe in the second or third inning because adoption is still increasing, but it's still so low. People are still trying to wrap their heads around it. And I know that we are reading about this and living it and using it in our lives on a daily basis, but not everybody around us is. And it's still very early. And so I think that this is a healthy correction. I think that long-term investors will probably use it as a buying opportunity. Certainly we are. And I really think that until 2026 at the earliest, NVIDIA has a beautiful moat around its business. It's going to be very difficult, if not impossible, to compete with them.
Okay, so here's what I think. You can correct me if I'm wrong, but it seems like NVIDIA has been priced so much to perfection that a lot could make its shares fall, but I'm seeing more risk to the downside and less opportunity for the upside.
So you bring up a great point. And so what you're talking about is valuing it relative to growth. So the big question mark is going to be the future growth. We already know how fast they've been growing, and it's pretty phenomenal. And like I said, I think that we can see as far out as about 2025, and then 2026, and afterwards, your guess is as good as mine. But I think that the biggest concern is that the heavy spenders are going to slow down. And if there's a risk, I would say that's it. That's what we're keeping close tabs on.
Okay. What is your assessment of the U.S. economy right now, and how does that affect your position in big tech?
I think the economy, which is consumer-based, is certainly slowing down. I think it's slowing down because of inflation, first and foremost. I think that within inflation, even though the rate is coming down, the cost of living is not coming down. I think that we're at a new plateau. That plateau is forcing hard decisions on everyday Americans. And not easy decisions. It's, should I get my medication? Do I need to move? Insurance is ridiculous, not just homeowners insurance, but also auto insurance. I think that the economy, although healthy, when you look at the headlines and the let's call it the survey results, if you dig deeper, it's not that healthy. If you look at the jobs. Most of the new jobs are part-time. Some of them are second jobs. You're seeing the opposite of growth in full-time jobs.
All right, Vijay, thank you so much for your time today. Always great speaking to you.
Likewise, thank you for having me.
All right, moving on from that, is the US dollar still dominating or its demise imminent? Now, according to JP Morgan, reports of its demise seems to be greatly exaggerated. The bank believes any meaningful erosion would take decades. And that's because it says emerging markets are still using dollars for bank deposits. There's more and more dollar-denominated debt around the world. But it did acknowledge that Washington sanctions have led countries like Russia, China, and more to building alternatives, and commodity markets are increasingly trading in non-USD currencies. Let's talk about Nordstrom. Could be going private now that discount stores have been the trend in recent years. Nordstrom family members have made a nearly $4 billion proposal to take the department store private. The offer comes from the founders' grandsons, Eric and Peter Nordstrom, along with other family members as well, and a department store chain with stake in the company. The retailer has been on a downward slide for years, with annual revenue still below pre-pandemic levels. Shoppers have increasingly turned to more affordable options. That's including Nordstrom's own discount store, Nordstrom Rack, has performed better than expected, boosting the company's overall outlook. Nordstrom's board of directors has confirmed that it received the offer and will review the proposal. Okay, onto the labor market. The number of available jobs in the U.S. continue to shrink in July, and this is indicating that the demand for workers continue to wane amid a cooling labor market. Job openings fell for the second consecutive month to an estimated 7.67 million, according to data released today by the Bureau of Labor Statistics. It's the lowest number since January 2021, many years ago. Economists were expecting the July posting to climb to more than 8 million. And a historical high of illegal immigrants are moving into the U.S. We take a look now at how the surge will impact the American economy. Take a look.
The U.S. is experiencing the largest immigration surge since the Great Wave of the late 1800s, the Congressional Budget Office says. An overwhelming majority, around 6.5 million, are illegal immigrants.
There were fewer babies born in the United States last year, less than 3.6 million, than there were illegal immigrants coming into this country.
Population researcher Steve Mosier says 10% of those babies are the babies of illegal immigrants.
I'm all in favor of more children, all right? I'm all in favor of population growth. I think a population decline leads to economic collapse. It leads to societal collapse.
Mosier says this immigration may help the U.S. with its historically low fertility rate, but he says it's better for citizens to have more babies than illegal immigrants. Census Bureau data suggests most illegal immigrants are young, have a low level of education, and are ready to work. These immigrants compete with native-born Americans for low-paying jobs, and this is likely to keep wages relatively low. The jobs most commonly worked by illegal immigrants are as construction workers, housekeepers, cooks, and janitors. The overwhelming majority come from Latin American countries like Venezuela, Mexico, and Honduras. Many are also from China, Russia, India, or Africa. Their top destinations are California, Texas, New York, New Jersey, and Florida. The Congressional Budget Office estimates the migrant surge will boost federal revenues by $1.2 trillion over a decade. It says the surge will boost economic activity and the migrants themselves will pay taxes.
Okay, Social Security is next. In its current state, it's facing $63 trillion in long-term unfunded liabilities. And that's the projection from the 2024 Old Age Survivors Disability Insurance Trustees Report. So that's looking at the entire lifespan of the program. Officials say that the deficits reflect increasing life expectancy as well as annual shortfalls of people paying in once trust fund reserves run out. Trustees say that the shortfall could be eliminated by a 27% reduction of benefits or by raising payroll tax rate to about 14%. Okay, a bit of China-related stories today. The country has exchanged another tit-for-tat, escalating more trade tension with another country. Beijing said it will launch an anti-dumping probe on Canadian canola oil exports. More than half of Canada's canola oil is exported to China, and that's the world's biggest oilseed importer. China reports that imports had jumped since last year. On X, Canada's farm minister said that Ottawa was closely following the case and would defend and support the farm sector. China made the announcement a week after Canada imposed new tariffs on Chinese-made electric vehicles. This is a move that the U.S. and the EU have already made. Meanwhile, the annual Toronto International Film Festival, or TIFF for short, is returning from September 5th to September 15th this year. Many new films from around the world will premiere at the festival, showcasing cultural diversity. Let's take a look.
Angelina Jolie is going to be here, Kate Blanchett, hopefully Amy Adams. So yeah, it's very, very exciting.
Tomorrow marks the start of the Toronto International Film Festival. The city is already filled with anticipation.
You have people from all over the world flying into Toronto, presenting films from all over the world. It generates a lot of excitement.
The year-round stuff is great, but I think the festival is really exciting and it's a nice thing for our city to have.
TIFF was founded in 1976, showcasing films from around the world. It's one of the world's largest annual film events, attracting both industry professionals and movie lovers.
I like seeing movies. I like seeing kind of different movies than you would get at like kind of the normal Cineplex. One of my favorite things is going to see something that you don't know much about and sort of being surprised.
People from all over the world coming to TIFF this year to just enjoy the films. That's how it's supposed to work.
TIFF is not just a celebration of the film industry, it's also a celebration of cultural diversity.
It's an opportunity for people from all around the world to come to Toronto, exchange ideas, exchange opportunities to share different perspective about movie, about culture.
Toronto is such a very cosmopolitan city. You have so many languages that are spoken here, so it's very exciting to see this translated into film. I'm from Brazil, so I'm always very excited to see like the Brazilian films and the artists that come.
As TIFF prepares to roll out the red carpet, the city of Toronto is ready to welcome the world. NTD News, Toronto, Canada.
All right, before I go, quick mention on Wall Street, mixed down, mixed day on Wall Street. Dow is up 1%. S&P continued yesterday's decline, down about 0.1%, and the Nasdaq is down about 3%. And that's all the stories for today's NTD Business Matters.